Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Friday afternoon. Friday, we made it. I'm Juliette Sarli. Great to have your company on a week where we have not had the best time for the market. We were just saying, though, all in context because pretty flat year to date. But let's have a look at where the CBO 200 is finishing Friday's session, really trying to just eke there into positive territory as it rounds out the trading week on a week where once again the Strait of Hormuz and the blockade there really caught investor attention with oil up for a fifth session. The S&P ASX 200 heading into the match off down just 3 points to 8,790 and it's down around 1.8% over the course of the week when oil has risen for a fifth straight session. US President Trump revealing he's ordered the US Navy to, quote, shoot and kill mine-laying boats in the Strait of Hormuz, and the Pentagon announcing it had carried out a maritime interdiction on an Iran-linked tanker. So we do go into the weekend with no resolution to this conflict, which has really been dominating market action since the beginning of March, bringing us into the themes of the day, which has been, of course, this week with the market down around 1 3/4%. Continuing on the Strait talk as we continue to monitor what will happen over the weekend and whether or not there is going to be a resolution or an opening of the Strait, and of course trying to resume, I should say, normal passageway of global fuel and oil supplies. And then central bank bonanza coming up, a really busy week for central banks next week. And don't forget the week after that, our own central bank, the RBA, will be holding its policy decision for May, with markets expecting that we will see another hike. Let's get into some of the sectoral checks today, kicking it off with what we saw in the tech space. And this came after we saw an easing coming through on the NASDAQ overnight. IBM slumping about 8% after revenue growth slowed in the first quarter. We saw mostly weakness coming through from our tech stocks. Tech One down by 2.5%. Life 360 was down 3%. Having a look at gold stocks as well this afternoon. They were mostly weaker with the exception of Newmont, which did have a market update today, so it rose by 1.2%. But Northern Star, Evolution, Capricorn, West African Resources, all a little lower today with gold futures dropping on a stronger US dollar. Energy stocks as well, let's have a look at those. As I mentioned, crude oil up for a fifth session, Woodside up almost 3%, Karoon up by around 3%, and Ampol up by 2%. Well, I mentioned Newmont came through with a quarterly update. First quarter net income, $3.3 billion, a 73% increase, setting its shares higher. We also heard from IGO cutting its full year 26 production guidance, so that saw its share price very much hammered by about 17% to the downside. Fortescue is in focus. It's approved a $1 billion investment to expand its green energy infrastructure in the Pilbara. And staying with iron ore, PLS reporting a 52% increase in March quarter revenue. CSL, meanwhile, fell to an 8-year low, but it has managed to rebound in late trade, up 1.5%. The Pentagon ending its flu vaccine mandate. Meanwhile, Judo reaffirming its full-year profit guidance of between $180 to $190 million, but it does expect to land towards the lower end. Iris held its AGM reiterating its full-year guidance, and EBT falling the most in 8 months with demand caution overshadowing its outlook. Shares down 7.4%. Let's welcome to the COB Shane Oliver from AMP. Shane, great to see you. Another week and the same themes we're talking about here, and still no resolution to the Iran conflict.
Yeah, it seems a bit like Groundhog Day, the same thing over and over. Obviously, the ceasefire was extended on another Taco Tuesday on Tuesday, and of course, there's still no resolution to the Strait of Hormuz. Markets are sort of starting to get a little bit nervous again. You can see it in the US share market overnight. With the US market reaching a new record high earlier this week on the back of strong profit results, but then coming back off a little bit again. And it's certainly noticeable in our market, which is down, I think it was 2%, maybe down 1.9% this week. So it's still fairly messy out there, and obviously a lot is riding on some sort of deal coming through and the Strait of Hormuz reopening. That is the key in all of this. If we don't see that soon, there will be major issues with global oil supply as refineries start to run out of stockpiles and so on. So that to me, I think, is the main issue in all of this. I think ultimately there will be some sort of deal. I think I tend to agree with markets that there will be a deal. Trump will ultimately taco. He is under immense political pressure given the upcoming midterm elections in the US. And of course, Iran, I think, is also under some pressure. But this uncertainty and the game that Iran is playing with Trump, and of course Trump's been playing games as well, that might still go on for a little bit longer.
Yeah, and then that plays into asset prices, as you were talking about, with these wobbly moves that we're seeing on overall share markets. What about when you look at other asset classes and what's holding up and what's not?
Well, it's fairly messy. I guess, we did see that risk-on phase a couple of weeks ago, and it continued to some degree last week. This week, you could argue, is a bit more risk-off. You can see there, silver is off, gold is off a little bit. The US dollar is up a little bit over the last week, and the Aussie dollar is down a little bit. So you can say that's consistent with risk-off. And I guess flip side, though, is that it's not that simple. Bitcoin actually rallied over the last week, as did the iron ore price. There, Bitcoin's, I think, around $78, 78,000 Bitcoin. Iron ore's, I think, above $107 a tonne, depending on which measure you look at. And so that's sort of contrary to the risk-off sort of scene we're seeing in some markets. So it's fairly messy, I'd say, in that sense. The other aspect in all of this is bond yields, which continue to rise in the last week, and that's not something you normally see in a risk-off environment, but I think it's more consistent with the stagflationary concern. We saw those business surveys, the PMIs released overnight and in Australia yesterday, and they showed some mixed readings regarding economic activity, a bit stronger in the US, but weaker in Japan and Europe. But across the board, you saw price pressures coming through, and quite significant price pressures, with some of the gauges in there, output price indexes and so on, heading to levels last seen in 2022. So that's certainly a concern, and it's certainly a concern in Australia. And that may be a factor which is weighing on bond prices or pushing up bond yields.
And there's other factors as well, the global inflation concerns, which is going to cause a headache for the RBA in May, as we say, a likelihood that we will get a rate hike. When you're looking at all these inflationary pressures, what are we seeing in terms of rent and how that is also pushing up inflation?
Well, rent is a bit of a problem in Australia. It has been for a while, but it was starting to cool down. The measures produced by the various private sector groups that track it, in other words, what they tend to track asking rents. So it's for a property which is being tenanted, what sort of rent is being asked for. And SQM is one of those groups, CoreLogic, or now Cotality as they're called, also do the same sort of thing. And they were showing a downtrend until recently. So the red line there had been going down. Recently, it's going back up again. And unfortunately, that means that the average rents tracked in the CPI will probably start to reaccelerate in the months ahead. So that certainly would concern the Reserve Bank, as would those other indicators I was referring to earlier from the PMIs, which for Australia showed upwards price pressure, consistent with the NAB survey that came out a week or so ago. So not a pretty picture there for the Reserve Bank, and that does point to upwards pressure on inflation in Australia, and is probably one of the reasons why the money market's saying 75% chance of a hike in a couple of weeks' time.
Exactly, and we are looking out for that. The other big thing that happened, and we're looking ahead to the budget as well, Shane, was what occurred with the NDIS. You've written a really interesting piece on this. Just tell our viewers that may not read your weekly note your thoughts here on what we saw with the changes to the NDIS.
Well, I thought it was a good move by the government. I mean, the NDIS is a good program. And the fact that we can do that as a well-developed country, relatively rich country, we have the ability to do those sort of things, look after our disabled people. But the problem is that the numbers have been sort of going ballistic. Apparently, the number of people covered by NDIS has doubled what was projected. And of course, if it continued at the current path, there is a danger that it could lose its social license. And maybe there was an element of this a few decades ago when lots of people have gone on unemployment benefits, and it became commonly known as dole bludging. And then, of course, the government of the day, 30, 40 years ago, had to tighten it up. tighten up the eligibility, so you had to prove that you're actually out there looking for a job and you are unemployed and for good reason, and therefore you deserve that payment. It's the same with the NDIS. The government had to tighten it up, otherwise it would become unsustainable. We'd hear more talk about rorts, and taxpayers would start to rebel. So I think it makes sense that they've done this. You can see in that chart there, it is one of the top spending items in the federal budget, now bigger than Medicare. I think for this financial year just ended, that is the last full financial year we have data for, 24-25, but for this financial year, 25-26, they're talking about a total spend of $52 billion. And it's come from nowhere a few years ago. It's an ever greater share of total GDP in Australia is spending on the NDIS. So what the measures announced by the government do on Wednesday, if they follow through on that, with more eligibility requirements and all those sorts of things, and some people being removed from the NDIS and going onto other programs, is that they slow the growth rate right down. I think it's 2% over the next 4 years, and then it settles down around 5%, which, if that occurs, should mean that as a share of spending, a share of overall GDP, the NDIS spending should stabilise. Which I think would be a good thing. And that takes some of the pressure off government spending growth in Australia. Because if you take it back to a high level, we have seen very strong growth in public spending right across Australia. That's taken public spending to a record high share outside of wartime of around 28%. It used to be around 22, 23%. So that's running at a record high. Part of that is the NDIS. The reason that is a concern is that it doesn't leave a lot of room or leave a lot of spare capacity in the economy for a pick-up in private spending. We saw that last year. That private spending came through and suddenly we had an inflation problem. So I think the bottom line is we need to see some wind back in government spending, and the measures to rein in the NDIS, I think, are a part of that.
Yeah, and the budget coming up, so is the May meeting. But next week, Shane, central bank bonanza.
It certainly is. There's 5 globally, and all 5, starting with, I'm going to forget the order here, but we've got the Bank of Japan, we've got the Bank of England, we've got the ECB, we've got the Fed, Bank of Canada. I think they're all going to leave interest rates on hold. They don't face the inflation pressures that the Reserve Bank in Australia faces, whether you look at underlying inflation or the headline. Maybe the exception is the UK, the Bank of England, the somewhat higher inflationary pressures there due to a whole bunch of reasons, including Brexit. That's slightly different, but they haven't cut as much and still been running relatively higher rates. So, and now they're seeing somewhat slower jobs growth in the UK, much higher unemployment than what we've got in Australia. So they're perhaps the exception, but they do face higher unemployment. But the others, I think, and the Bank of England, they're all going to be sitting back waiting to see what the impact will be in terms of the contribution to higher inflation on the one hand, but also weaker economic growth on the other hand. So we're going to look like the odd one out if, as seems likely, come the meeting in 2 weeks' time, the RBA hikes, whereas all these other central banks leave rates on hold. And that, of course, was pretty much the story in March.
It certainly was. Well, a really important weekend, Shane, Anzac Day, where we honour those and, pay remembrance to those that have fought for our freedom. What else will you be doing this weekend?
Well, that's a good question. I think I'll be just recovering from the last week. It's been a fairly busy one. I've been all over the place in the last week. It seems I even made it to Ettalong to do a presentation, which was kind of nice because it's not that far away from where I live if you catch the ferry. So I'm going to be recovering after a fairly busy week. But it looks, in part from the Anzac Day, which I never used to fully understand when I was a kid, but now I do. And I really value the freedoms we have in Australia. And the sacrifices, I'm not saying this glibly, I mean it seriously, the sacrifices that my relatives actually made in the past. I mean, one was killed on a minesweeper. My grandfather, that was in in Europe. Another one, my grandfather actually fought in World War I. And another one went off to Qoria. So lots of history, I guess, with many Australian families on that front. So I really appreciate what they did for us. But apart from that, looks like the weather's going to be fairly good, so maybe I'll get out on my boat. I don't think I'll be in the RSL playing 2-up, but that's something that a lot of people like to do on Anzac Day. There is a great film on 2-up, actually. It's called Wake in Fright. I might have mentioned this one to you. because we often get into films, but I saw this over the Christmas period. Weekend Friday. It was made in 1971, I think it is, about this guy who gets into a two-up gambling episode in, I think, Western New South Wales or somewhere like that, and then the whole film goes crazy. It's a bit of a thriller as to where that film goes, but it's a classic Australian film which sort of ushered in the renaissance of Australian cinema through the 1980s ultimately. So anyway, so I won't be playing two up, but I will be hopefully getting out of my boat given the weather's looking like it's going to be quite nice.
Sounds lovely, Shane. Enjoy. We'll catch you next week. Shane Oliver from AMP. Shout out as well to my brother-in-law who also serves in the army. All right, let's have a look at what we saw in the stock of the day. It was Qoria, and we heard from my experts Luke Winchester from Merewether Capital, Richard Hemming from Under the Radar Report.
I don't tweet much, Nadine, but I did have one this morning and basically said Qoria keeps using the term merger for this agreement, but this is looking less and less like a merger and more like a backdoor listing for Aura. There's now a lot of equity being put into this business from the Aura backers, not just the placement which you were talking about, which has been upsized, and also that price has come down, which I think is the most disappointing thing for Qoria shareholders today.
They've been hit hard by that downswing in software. And when you've got debt on your balance sheet, as Luke said, your options are so much more limited as to just, it's better to cut and run. And that's a situation, unfortunately, with this stock. Like, they had great ARR growth, but their margins were a bit thin. This is basically how I looked at it. Margins were a bit thin. The compelling factor for avoiding or for not being in it was debt. So we've seen that KMD, if you have debt and your business model is under question, it's an existential risk. That's the bottom line. And these guys are just in survival mode, and Luke's saying, I don't even know what form that survival is going to take.
You've worked hard for your money all your life. Now your money needs to work hard for you. Whether you're building, transferring, or drawing down, the right information makes all the difference. At Ausbiz Retire, you'll find the latest news and insights from trusted experts all in one place. Ausbiz Retire is powered by RAN, retirement income done differently.
Let's have a look at market leaders today on a pretty flat day and a down week. Data3 had a good session. Suncorp did on its update as well. Austral, Reliance Worldwide and Telix Pharmaceuticals also at the top of the leaderboard. To the downside, though, we did see IGO after its update fall by almost 17%, and EVT2, which came through its update, falling by more than 7%. In the small end of town, these stocks on your screen did very well, including Addison, which had an impressive 49% or 7-cent jump to its share price to close at 20 cents. The laggards in the small end of town included Qoria, which was, of course, our stock of the day, falling by almost 23%. So tonight, we will see some more US first quarter earnings, including Norfolk Southern, Procter & Gamble, and then also the University of Michigan consumer sentiment for April, which is expected to marginally improve. Next week, we mentioned really big week for central banks. The Bank of Japan kicks it off on Tuesday. We've got our own inflation data for March on Wednesday. Thursday is the Fed's rate decision, and then we continue with these quarterly updates, including Woodside, Karoon Energy, Mineral Resources, Woolworths, and ResMed. Let's have a look at where the local market has finished the day and the week's trade. The CBO 200 just managed to get into positive territory there, up by 0.1%, and the S&P ASX 200 has finished the session down 7 points to 8,786, down 1.8% over the week, but unchanged year to date. Have a safe weekend. The ASX is open on Monday despite the public holiday in New South Wales, so we'll see you bright and early from 9:45 a.m. Eastern.